All right, everybody. Thank you guys so much for watching our video. This is myself, Clayton with OBR, and Rohan with Brisk Commerce. Rohan, thank you so much for joining me today. I appreciate it.
Thank you, Clayton, for having me. Appreciate it, man.
Yes, sir. Yes, sir. So tonight, guys, we are going over SPY. We're recording this Friday night. This is a couple hours after the markets closed. So we've seen a whole bunch this week. And SPY got some serious sell volume coming down to the end of the day on Friday. So we're going to go over that. So what you all see in front of you is my day chart for today, 1 minute. And we gapped up from yesterday. And I was very, very curious to see whether or not we were going to hold that strength. First thing we did is we came crashing right back down, got some intraday buying, which was interesting. I wasn't expecting it. I was expecting a slow trend down. And then we closed well below 450 where we opened up, well below that. So that's a $5 drop as to where we closed down from. And then our highs are in the 554 range. So we're closing here almost $10 a share down from the highs. So let me move up to a higher time frame here for you all. This is the biggest thing that I want to go over here. So if I go over to the 180-day time frame, excuse me, we see multiple incremental drops. About 3 weeks ago, we saw a decent sized drop in SPY. We wicked down, I believe, not in open market and pre-market, to about 434 with a high before that of about 447. All right, so that's not too big of a drop for SPY. So that's not necessarily something I was terribly worried about. It gave us a lot of reentry options, which is phenomenal. However, if you go through all of these ranges of drops from highs to lows, sorry, this fib retracement is off-centered. I apologize. If you go from highs to lows here on all of these extensions into all-time highs from dropping down, actually here we were just retesting an all-time high, right, getting above it, and that was about 2 months later or a month and a half later. So we could have a larger pullback, and I brought Rohan in to talk about what we could potentially be seeing if SPY were to come down further than 10 to about maybe $18 a share, which is the drops that we've seen here in the past 180 days.
Yeah, sure. So I actually could definitely give my 2 cents about this. Looking at larger technical pullbacks on a broader time frame, even looking at it from the 4 hour, or Clayton, if you could go to the 1 day. Thank you. Or 1 year, 1 day. Thanks. So essentially the biggest thing that I look out for when I'm looking technically on a graph is the slope of the graph at any given point. I don't know if you guys have taken like calculus or anything like that, but if you take the derivative of any given point on the graph, you can see that currently the slope is decreasing, excuse me, at an increasing rate. So that will help you accurately understand what direction the market is going in. Now, as you can see with the moving average convergence divergence indicator at the bottom, which is the MACD, there is just now rising bearish volume. And as Clayton said earlier, that was primarily towards the end of the day, like I'd say around after 2 o'clock p.m., from 2 o'clock p.m. to 4 o'clock p.m. is when the bulk majority of volume came in. So just keeping that in mind and understanding that we are very overextended, looking at this time frame, as you can see, the exponential 200-day exponential moving average at the bottom of your screen suggests that this graph looks quite overextended, in my opinion.
So let me just add on to that, and thank you so much for that. I couldn't agree with you more. Let's look at the past month, or sorry, the past 10 days. So we had a little bit of a pullback. This was just, let's see here. Hold on, let me go to the 20-day. So this was our last pullback that we had, zooming in from the 180-day. That was the pullback that I was just referencing, from 447 down to 434. So like I said, this was not in market hours. So I believe we opened up at about 436 this morning. Sorry, I'm looking at the top of the candle. So we opened up, it looks like, at about 435 and some change, very low 435. And our previous high from our previous high before we had that pullback was at 447. So that being said, that's a $12 drop, and I was expecting us to get down to at least 432. We moved forward, okay? Not a week and a couple days later, we were already hitting all-time highs. So usually when we get a SPY pullback, I give myself a couple, 3 weeks for it to recover just to where it was trading at prior to the drop, much less an all-time high. One of the things we covered in our live call at OBR in the Discord today at 3:30 was that we have had some unbelievably aggressive retracements, which is very, I mean, SPY has always done about 12 to 15% a year. And if you're buying these dips, you're getting 12 to 15% in any form of options play you really run, which is kind of unbelievable. And if you're getting longer term expirations, you can turn 12 to 15% from usually any of these dips to 30 or 45% conservatively too. So we're trying to also show you guys what we think SPY will do, but on the same foot, we're trying to show you all how you can take advantage of it. So one of the ways that I do specifically, let me go back to well, actually, before I say that, in the past 10 to 20 days, we already fully recovered that dip that we saw, albeit a minor one in regards to our range of drop that we see, which is, for me, it's about $15 to $22 is the range that I look for SPY. It's a wide spread, and I trade long term, so I'm not looking for pennies here. So this one was just an $11 drop or a $10 drop. So that was not a lot. And Rohan, before I go to the other time frame and talk about entries, do you have anything to add here?
Yeah, absolutely. So I also really look at volume on a larger time frame as well. Look at, from when it hit the low on this graph, you can see like that low of 434.50. From there to right now, that's where some real major volume came in. If you look at it, 1, 2, maybe 3 days after, 4 days after, there is minuscule volume, approximately, 1/3 of that came in on that drop. And that was, the day after the after hours drop. So if we're looking at this on a larger time frame, you can see decreasing volume with increasing, increasing stock price. With decreasing volume and an increasing stock price, those two put together is usually a bearish indicator.
Right. And I couldn't agree with you more. And that's something that we're looking out for here. So if I go to a higher time frame, if we just look at the 180-day with the S&P 500, with SPY, and we're going to go over some of the major allocators in our live call. With SPY specifically, if you just look at the last 180 days, and we can look at much larger time frames if you want to, and I will. The last 180 days, every single major, let's create a larger range here. $8 to $23, $24, $25 pullback SPY has had. It has recovered it within a month at longest, from what I'm seeing, which is unbelievable. And it really shows us that overall, we're in a very bullish market. We're doing very well on higher time frames. That also being said, no bullish market can avoid a healthy 2 to 5 to 10% correction, right? No bullish market can avoid it. And we do need these kinds of corrections for us to be healthy and continue in a bullish trend. Now, those corrections also provide us a plethora of opportunity long for shares, for long calls, long credit spreads, anything that you feel like is best to take advantage of such a high time frame sell-off. Do what's best. And we're happy to go over all of that. But for this specifically, I really want to make sure you guys are understanding that at any point in time, we could break trend to the downside. We've already, in the most recent all-time highs, broke trends to the upside, meaning we are even more overextended than Rohan and I feel we are right now. So if we're breaking trends to the upside comfortably, I do believe that we can comfortably break trends to the downside as well. Again, I'm optimistic always on the market, so I say that provides opportunity. But guys, if you're in short positions, meaning short expiration positions, please be careful. We have been bleeding for the past week. Even with the holiday, we've been bleeding. We hit our all-time high, and ever since our all-time high, we have been bleeding down to 445. So
and lowering volume since as well, right? Like, ever since we hit that all-time high, it seems like people have just given up the volume in the market.
So, and that's just another wonderful indicator that you all have to be looking at. And I know a lot of you guys look at it on the 1 minute and the 5 minute. I encourage you, please, to look at it on higher time frames so you can see a larger picture, because I know a lot of us love leveraging into, great potential return positions. If you look at SPY on higher time frames, your potential returns it can exponentially increase. Now, SPY, you're not going to be getting those 800 to 1,000% plays necessarily intraday on SPY. Back it up to a month chart, and you could see a major pullback that you take advantage of, and you could have an 100% long play, which is incredible. That means you are beating out the S&P 500 by 10 times. That's incredible, and that's a safe trade, right? We're just looking for much more conservative $10 to $22 pullbacks where we're entering in, and we're lagging into these trades, right? We're not going all in as soon as it hits the beginning of our range, and we're not going all in when it hits the end of our range. We leave cash on the table, and we leg in as it provides opportunities, because year over year, the S&P 500 is up. Year over year. We could have a huge correction or a stock market crash. We had a crash during COVID, right? And it corrected it and was hitting all-time highs 3 months later. So just to cap off everything that we've gone over, and I'm happy to go over more trades and take any requests that you all have in this video. So please do me a huge favor and comment for the both of us of any questions we can answer for you all. We are doing these TA videos for you guys. We want to help as much as possible. And I would love to hear, Rohan, what you have to say to finalize.
Yeah, I feel like you summarized this quite well. We're obviously in this to answer questions for any of you guys. So, like Clayton said, feel free to leave a comment, literally add us at, stocks with CC, right? And at Brisk Commerce. These things are definitely something that you should be looking out for, obviously on a technical time frame, on a technical way on a larger time frame, as well as on a fundamental way. We'll be covering all this stuff in our live video, which will be tomorrow, or this is going live today, actually. So let me take that back. But anyways, just to summarize overall, you need to be looking at these next couple of days. It's very important to understand exactly what's going to happen, because if we break support to the downside, there's a very large possibility that we could correct.
I agree with you wholeheartedly. And one of the ways you guys can find some of these price points, very simple way, look at a higher time frame and line up your cursor on all of these multiple drops that we have had through the last, let's say, 180 days. All right, that will give you a great and very, very close. You could even do $1 above and below the line that you find to be very safe. If you're trying to find major supports and you're looking to say, hey, oh, wow, it broke that support and that was from a month ago. Maybe we are heading lower, or it bounced right off that support and maybe we're in the clear to return back to where we were previously trading in the 450s. Just be careful. Allow the market to do what it needs, but be prepared ahead of time so you have a plan no matter what the market does. All right, this has been Clayton with OBR, Rohan with Brisk Commerce. Thank you guys so much for joining us. This is the first episode of a multiple episode series, including our live calls, and we have way more to show you all.